Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about TS Lines Limited annual report. TS Lines Limited offers a diverse range of services to various clients across the globe. The company provides shipping container and related services in multiple countries, including Hong Kong, mainland China, Taiwan, the Philippines, Japan, Australia, Thailand, India, and internationally. The company's services include vessel chartering and shipping agency services, which cater to different types of customers such as freight forwarders, other container shipping companies, and BCO, beneficial cargo owner, customers. These BCO customers are typically small and medium-sized businesses that manufacture consumer, primary, and mechanical products. TS Lines Limited operates a fleet of owned vessels and chartered vessels, enabling it to offer comprehensive services to its clients. The company's extensive network and diverse range of services make it a significant player in the shipping industry. TS Lines Limited market capitalization of $14 billion is materially smaller than most of its industry peers of roughly $30 billion. TS Lines Limited trades at a lower price-to-earnings ratio of 5 times and a higher price-to-book ratio of 0.84 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it peers. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than TS Lines Limited itself. The balance sheet appears very conservative, with liabilities representing only 15% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 9.29%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline in the shipping industry can be identified through various market trends and regional performances. On the growth side, intra-Asia trade continues to expand, driven by manufacturing shift trends in Southeast Asia and the Indian subcontinent. The Greater China-North Asia market has shown significant growth, with a 12.1% increase in revenue and a 10% increase in volume. Additionally, charter hire revenue from vessels has increased by 39.1%, while freight and handling services income collected on behalf of the group have also seen an uptick. On the decline side, global freight rates have decreased due to growing supply of shipping capacity, leading to market adjustments and individual regional market rate fluctuations. The North Asia-Southeast Asia market has experienced a significant decline in volume and revenue, with decreases of 29.3% and 20.3%, respectively. Other regions such as the Chinese mainland, Philippines, Australia, Thailand, and India have also seen declines in revenue. It is worth noting that some markets have shown neutral or no significant impact on revenue growth or decline, primarily due to a lack of relevant information or events affecting these areas. Overall, the shipping industry's revenue performance is influenced by a complex interplay of regional market trends, global supply and demand dynamics, and individual market fluctuations. The fluctuations in net income and profit margins can be attributed to various factors. On page 10, a significant decline of 19.5% in net income from $315 million to $253.7 million was observed, primarily due to the decrease in average freight rates. However, on page 11, an increase of 10.1% in net income from $306 $165.9 million to $328.9 million was reported, but no specific reason is mentioned for this change. On page 65, a slight decrease of $37,315 in net income from $366,202 to $328,887 was noted, with no explanation provided. On the other hand, on page 94, an increase in net income from $92,735 to $114,507 can be attributed to several factors. The rise in charter hire revenue and a decrease in finance costs contributed positively to the net income. Additionally, a net foreign exchange gain also played a role in this increase. In terms of profit margins, page 10 shows a decline from 23.5% to 19.7%. Page 11 reports a decrease in return on equity and return on total assets, while page 65 indicates a drop in gross profit margin and operating profit margin. The company's financial performance indicates a positive trend. The increase in net current assets and cash equivalents on page 12 suggests that the company is managing its finances effectively. Furthermore, pages 70 and 71 confirm that the company is indeed generating positive operating cash flow, with a notable value of $502,145 in 2025. This indicates a strong ability to generate cash from operations, which is a key indicator of financial health. Overall, these metrics suggest that the company is on solid ground financially. The company's debt level and interest expenses have undergone significant changes. According to the extracted summaries, the total bank borrowings remain at $0 for both 2024 and 2025. However, the capital commitment has increased substantially from US $599.1 million in 2024 to US $837.2 million in 2025. This increase is also reflected in the number of vessels contracted but not provided for, which rose from 599,128 in 2024 to 837,212 in 2025. In terms of interest expenses, there appears to be a discrepancy between the two summaries. While page 71 indicates that interest expenses increased by plus 14% from $2,732, 2024, to $3,067, 2025, page 122 suggests that they have actually decreased slightly from 2024 to 2025. Further clarification is needed to resolve this inconsistency and determine the actual change in interest expenses. Management's outlook on the company's future. According to management, the global shipping market is expected to be uncertain in 2026. To mitigate this uncertainty, the company will adopt a prudent approach by optimizing routes and vessel fleet mix. This strategic move aims to sustain long-term development. In addition to navigating the challenges of the shipping industry, management is focused on developing long-term strategies that align with the company's overall vision. This involves reviewing business plans, prioritizing corporate governance, and monitoring management performance. By doing so, the company can ensure that it remains competitive and adaptable in an ever-changing market. The company has also emphasized its commitment to transparency and accountability. With a zero-tolerance approach towards bribery and corruption, management is dedicated to providing shareholders with balanced and understandable information. This commitment to corporate governance reflects the company's dedication to ethical business practices and responsible decision-making. The company's financial strategy includes a commitment to returning value to its shareholders through the payment of dividends. This approach demonstrates a focus on rewarding investors for their loyalty and trust in the company. By distributing a portion of its profits, the company aims to enhance shareholder returns and maintain a strong relationship with its stakeholders. For those seeking more detailed information, page 69 provides specific details on both interim and final dividend payments made by the company. This section offers a comprehensive overview of the company's dividend history, allowing readers to gain a deeper understanding of its financial performance and commitment to shareholder value creation. Concerns about inventory buildup or supply chain disruption are indeed present. The Strait of Hormuz and the Red Sea, key shipping routes, pose significant security risks that could impact global shipping supply and logistics efficiency. Escalating tensions in the Middle East further exacerbate these concerns, potentially disrupting global shipping operations and affecting the timely delivery of goods. That concludes the financial summary for TS Lines Limited. Feel free to comment below, and I will be happy to answer them when possible.